Good morning, everyone. For some of you, it's good afternoon, but to all of you, I hope you're going to have a great day today. I'm really excited to be able to share with you some great information to help you be more successful in your ministry or your outreach for your faith-based organization. Today, we're going to talk about donations and clarify as a donee and as a donor what that should look like. And so we're going to break that down for you today. And you can follow along with me. I'll have a PowerPoint that you can follow along for the major points as well as my verbal presentation. Let's start off today with just sharing a verse that I wanted to share with you. That is an awesome verse, very inspirational. Comes from the Old Testament. It's Micah 6:8. He hath showed thee, O man, what is good and what the Lord requires of thee, but to act justly, to love mercy, and to walk humbly with thy God. I love that verse, and I wanted to share that with you this morning. Hopefully that'll share some light for your day and give you some encouragement. We have an awesome God. I'm just very thankful that His mercies are new each and every day, and I'm thankful for His loving kindness to us. Let's start with the word of prayer, also before we do the presentations, if you'd join me, please. Heavenly Father, thank you for this day. Thank you for your goodness to us. Lord, that we ask that you would watch over our country. Father, we think of the people in Boston, Father, and Massachusetts, and those that attended the marathon yesterday, Father, that were affected from this horrible situation, Lord, with the bombings. We ask, Lord, for physical healing, Lord, and strength to those that were injured. We ask for comfort to the families of those who were affected that lost their lives. We ask, Lord, that through this horrible situation, that your name be glorified, Lord, that you would bring about healing and restoration, Father, and that you may be glorified through this. We thank you for this day. We ask, Lord, that the information that I share now with these fine folks, Lord, would be blessed, that you would help them to be successful, Father, as they navigate this year, and that you would bless them in their endeavors. We ask these things in Jesus' name. Amen. Okay, I wanted to start off by just sharing that the information provided, this is our legal disclaimer, is not to be construed as legal advice. We do share legal information, and we love to do that, but we're not giving you specific legal advice. The information material presented is the exclusive property of Helping Hand Outreach, and any unauthorized use is prohibited. Phew, got that over with. What are we going to talk about today? Proper tax receipts. So this is going to apply for those folks who have a faith-based organization, whether it's a 508, whether it's a 501c3, it doesn't matter. In fact, what we're going to talk about for proper receipting is applicable to any charitable organization because the laws governing donations and how those are supposed to be documented when they're given as donations is the same for all those organizations. So we're going to today talk about the federal laws that deal with donations. We're going to share with you some 3 recent tax court donation cases that interpreted the laws. And then at the end, I'm going to share with you what to include in your receipts. So let's start here. What makes a proper tax receipt? Let's look at the federal laws that relate to this. Okay, and before I do that, I want to talk about some terms so that that we make sure that we have an understanding. When we hear the term intangible religious benefit, for most of us, that's not going to affect our donations because an intangible religious benefit is something that's given for the donation. So an example would be someone can have admission into a special ceremony for the organization if they give a donation. For most of us, that's not applicable, so I'm not going to spend much time talking about that. But when we see that term come up, I wanted to be able to at least give you an understanding of what that means. What does pertain to all of us is contemporaneous. What does that mean? Contemporaneous means proper and timely, okay? And that's very important when we start talking about donations and receipts for donations. Because even if you have a receipt for a donation and it's given to a charity that is a lawful charity, if it's not done in the proper timing, then it's disallowed. That's why it says proper and timely. And the third part is substantiation. Is substantiation required for all donations as an individual? Okay, so meaning me, Dan Peterson, when I fill out my tax return, okay, do I have to substantiate all my donations? And if I get audited, will all those donations have to have substantiations in order to be accepted through an audit? The IRS says, no, not in all situations. Not if you donate to a 501c3 organization that files a tax return. So most 501c3 charities file tax returns, okay, and those are educational institutions, those are scientific institutions, those are youth sports, and there's other types of 501c3 organizations. They are all required by law to fill out a tax return, and they have to show their donations given. So because of that, if the charity files a tax return and shows that, that is acceptable to the IRS if the individual that gave a donation to it is audited to prove that their record keeping and receipting was documented. So what we're going to share about with today is really for faith-based organizations that are 508s or 501c3s, because those groups do not have to file a tax return by law. So we're going to concentrate on the 508 and 501c3s that do not have to file tax returns. Okay, so that's the terminology. Let's look at the law first of all. The section of law that comes for donations, okay, comes out of Title 26 of the United States Code, Section 170. And you guys can Google this on your own, but I want to just point out the key parts of the law out of those sections. What's important to know is that this section of law covers charitable contributions and gifts given to nonprofits. So the first part I want to point out is Section F, disallowance of deductions in certain cases and special rules. Okay? And then out of Section F, go to 8, substantiation requirement for certain contributions. Okay? Notice the language says certain contributions, because just a few minutes ago or a minute ago I said that not in all situations do you as an individual have to have substantiations. If you give it to a 501c3 organization that files a tax return, you don't. That's the exception. But otherwise, if that organization does not file a tax return, which a 508 does not, and faith-based organizations that are 501c3s do not, then you have to have substantiation requirements. So then under 8, look at Section A, the general rule. No deduction shall be allowed under Section A for any contribution of $250 or more unless the taxpayer substantiates the contribution by a contemporaneous written acknowledgement of the contribution by the donee organization that meets the requirements of subparagraph B. I highlighted for you in the law those two words, substantiates and contemporaneous. Okay? If you make a contribution of $250 or more, and that means each individual contributions, some people make contributions regularly that are below that dollar amount, okay? Then they don't have to go through this whole process for documentation. Okay, they have a lower threshold. What we're focusing in on is an example for folks that are giving more than $250. So if you gave $250 once a month, $500 once a month, or you just gave $5,000 for once a year, all of that qualifies for more than $250. You can give $250 10 times a year. That qualifies. Now this is still, I'm going to the next slide, but this is still part of the same law and all of the provisions that are necessary. Section B says the content of acknowledgement. An acknowledgement meets the requirements of this subparagraph if it includes the following information. B is talking about the donee. This is the 508 organization or the 501c3 faith-based organization. What it has to do. So we're talking about two things. One is we're talking about the donor that is listing a tax deduction on their tax return. The second part is the donee, the organizations that's receiving the tax deductible contribution has to do receipts in a certain way. So this is why it's so important, because some folks contribute money to a 508 or a 501c3 that they are a director of or a member of. So one is the organization wants to be able to have the donation, and two is the person that's a member of the organization wants to be able to use it as a tax deduction. That's perfectly legal and acceptable, but it needs to follow a certain procedure for that if it's over $250. So section 1 now, the amount of cash and a description, but not value of any property other than the cash contributed. So one is the receipt should have the amount. We're talking about contributions that are cash contribution, which means actual cash or a check written, okay? We're not talking about a boat, a car, or a home, or rental property. Those are non-cash contributions. We'll talk about those in a minute. We're talking about cash contributions. If it's more than $250, it has to list the amount. The second part is whether the donee organization provided any goods or services in consideration in whole or in part for any property described. Okay, what this means is if you as a donor or any donor gives money to your 508 or 501c3, that's a faith-based organization, okay, and it's over $250, the organization needs to give a receipt that says on there if there are goods and services provided as part of what that donation entailed. In other words, if I just give $250, $500 to a 508, and I just give it, and there's nothing coming back to me, in other words, there's no goods or service being returned, the receipt needs to say that. But if I give that to the organization and they're going to give me a CD, or they're going to give me books, or maybe they're going to give me a membership because it was a fundraiser to a gym or a fundraiser to something else. If I'm going to get something for it, then the receipt needs to say that and what the value of that is. And that needs to be reduced from the dollar amount of the donation. If it's the equal to the amount of it, then there's no real tax deductible contribution. You just gave money as a donation, but you got services for it. That's critical because many 508 and 501c3 organizations do not do number 2. They don't put down in the receipt if goods or services were given as part of the donation. And that's critical that part be included. The third part is there needs to be a description and good faith estimate of the value of any goods and services referred to. Okay, an example I just gave was as if there's books or CDs. That's a simple example. Then what's the value of the CD or books? Is it $20, $30, $19.99? Whatever it is, it has to be a good faith estimate of what that value is, and then you subtract that from the donation. Okay, the next part of the law says contemporaneous. Again, I have bolded next to that proper and timely. For the purpose of, that's what the word means. For the purpose of subparagraph A, an acknowledgement shall be considered to be contemporaneous if the taxpayer obtained the acknowledgement on or before the earlier of the date that the taxpayer files a tax return or the due date of the extension they filed. Okay, which is if people filed extensions because taxes were due yesterday, April 15th, then their taxes are now due October 15th. What this is saying, listen to this, everyone. What this is saying is, if you file your tax return and it's submitted and you give a donation to a charitable organization, whatever that charitable organization is, and then a year or 2 years down the road or whenever you as an individual get audited, okay, or it could be a corporation that gives a donation to the charity, 508, 501c3, whatever, okay, and that organization gets audited. And going through the audit, the auditor says, do you have a tax deductible receipt for this? And you don't. It doesn't matter if you've got a receipt in the checkbook. It doesn't matter if you've got something else written out on a bank statement. You're going to lose that deduction on your tax return. Okay, you've got to have that tax receipt before you file your tax return, not afterwards, not during the audit, or anytime after. You're gonna lose the deduction. So that's why it's critical when it says contemporaneous, meaning proper and timely. Proper means the form of the receipt, the language in this receipt has to be a certain way, and timely, it has to be done before you file your tax return. Can't do it after the fact. Okay, let's look at another section of the code. This is 26 CFR. That's section 1.170 A through 13. Okay. The title of this is Record Keeping and Return Requirements for Deductions for Charitable Contributions. Okay, again, this is for 508s and 501c3 organizations. The first example was a cash contribution. This example and this section of the law deals with non-cash contributions. What are those? Again, that's property, real property. That's a car, a boat. It's anything that's not actual currency that you write a check for, basically. If your non-cash contribution exceeds $5,000, you must have a qualified appraisal, not done by you, not done by your friend, but by someone that has credentials to do an appraisal. And it must be attached with a completed Form 8283. You can download that on the IRS website or get that from your CPA or accountant. And if it's certain types of non-cash contributions, you must maintain records pertaining to the claim deduction. In other words, if you have some currency that you bought, some stock certificates that go up and down each day, okay? Those types of things you need to keep records of to verify what the value was at the time. If it's a boat or a car or a home, then number 3 doesn't apply. But you still have 1 and 2, which is you have to have a qualified appraisal and you have to fill out 8283. Okay? That's for non-cash contributions. So let's look at, that was what the law says for cash contributions and non-cash contributions. Let's look at some recent tax donation court cases that interpret and help us see how this is interpreted at tax court. So these 3 cases are people that made donations. All 3 of these are cases where an individual made a donation to a charity that the IRS said, yep, that's a charity, and you made a contribution to them. But they missed one or more parts of the law that we just mentioned, and we'll see what the tax court does. Okay, so the first case is Villareale versus the Commissioner. And this was from 2013. This was just last month. This was in March. In this case, in 2006, the petitioner, who is the taxpayer, made 44 contributions to a nonprofit called NWM. And those contributions totaled a little over $10,000. The contributions were made in varying amounts, with 27 contributions were for less than $250, and 17 were for more. Okay? They went through an audit, which about 1% of people, on average, go through an audit every year. And the IRS said, was the respondent in the case, the respondent, which is the IRS, says it does not dispute that the petitioner, or the taxpayer, made the contributions to a qualified exempt organization. They argued that the petitioner, or the taxpayer, is not entitled to the deduction of $250 or more because they did not substantiate their deduction, and it wasn't done in a contemporaneous written acknowledgement, meaning it wasn't done timely. In this case, they had the taxpayer had filed a tax return, and they had a receipt for it, but the receipt did not state whether any goods or services were provided for their donation. Okay, and so what happened was the taxpayer tried to follow that up with, well, here is a correct receipt that they got from the charity, and the IRS said, no, it's after the fact, you've already filed your tax return. So then they took them to tax court and they said, but we've met the intent of the law. We might have messed up one point, but we didn't try to do anything deceitful, and we followed what the law did to the best of our ability, so we should be allowed, and this should be granted. And the tax court said, no. Okay. So the next case is Durden versus the commissioner. This was from 2012. This one was for donations that went to a church. It was a 501c3 church, not a 508, but it was a church. The petitioners or the taxpayers claimed a little over $25,000 for charitable contributions made by cash or check. Most of the contributions were made by check to Nevertheless Community Church. The petitioners produced records of their contributions, but the respondent, which is the IRS, did not accept their attempt or their receipts on the first acknowledgement, meaning that they asked for the records in the audit. And they informed the petitioners that it lacked a statement regarding whether any goods or services were provided in consideration for the contribution. And their deduction was denied. So they got hit with extra income that they had to pay for that, and they lost that deduction on their tax return. And that was one that went to a church. The last one, Friedman versus the commissioner, came in 2010. This is a case where the taxpayer gave non-cash donations to the charity. So the petitioner, the taxpayer, claimed $217,000, a little more than that, in deductions for donations of equipment, the diagnostic and laboratory equipment. However, they did not provide adequate descriptions of the equipment, and they did not identify the valuation methods that they used to determine how much the equipment was worth, nor did they include how they acquired the equipment and how much they actually paid for the equipment when they originally bought it. They didn't include that information. And they also did not include appraisals for all the equipment, just for some of the equipment. So the petitioner, as the taxpayer, did not provide appraisal reports for all their claim deductions. In addition, those appraisal reports and receipts omitted information required to substantiate their claim deduction. The petitioner also failed to demonstrate that they obtained adequate written acknowledgments, receipts from the donee for their contribution. So not only did they not do that, but they didn't get a proper receipt from the charity, and their deduction was denied. So, what to include in receipts to make sure that, one, you as an individual, you as a donor, can use it as a deduction, and two, you want to be, as if you are a director or a member of a 508 or a 501c3 faith-based organization, you want to be able to make sure that you give accurate receipts out for your donations. Because if the people that are donating to you get burned on their donations, they're not going to want to give to your organization in the future. Okay? So let's look at what to include in the receipts. Here's a summary for cash donations of $250 or more. There's 4 critical points that you need to remember. The receipt has to state the amount of the contribution is the first point. Number 2, the receipt must give a description of anything the church or the ministry gave in return for the donation. For example, if you make a donation of $400, we'll send you a special book signed by the author. Okay? Then you have to reduce the amount of that book value from the donation. You can still claim the donation, but you have to reduce it by the amount of the value of the book. Number 3, the receipt must state the value of what the taxpayer received in return. And number 4, the taxpayer must have the receipt before filing his or her tax return, or by the due date of his or her tax return, including extensions. Number 4 applies to a taxpayer, yes, but it also applies to corporations. Because corporations can give donations to charities, and if they don't have a proper receipt and they get audited, they'll lose out on that donation if they don't have a proper receipt. So number 4 applies also to corporations. So here's the summary for non-cash donations. Some folks work with their members and have other people that want to donate real property, a home, to their 508 or their 501c3 faith-based organization. Okay, that's a non-cash donation. Or they want to donate a car, as an example. Okay, if they're going to do that, number one, obtain a qualified appraisal. That's key. And it's got to be from somebody that has the qualification to do that. That cannot be your brother. Okay, it cannot be you. That's not qualified unless, well, even if you were qualified, you shouldn't do that. It should be by somebody independently. Number two, you need to attach a fully completed Form 8283 from the IRS. 8283 for all non-cash donations. If you're giving stock certificates or some other types of investments that go up and down, you need to keep records regarding the value of that, especially at the time that you gave the donation for verification. And number four, the taxpayer must have the receipt before his or her tax return or by the due date of the extension completed. Okay, questions? That was a lot of information, but it's so important when we're talking about donations and how to do those correctly that I wanted to devote this webinar just with what that should look like, what the law is, and what that should look like. So I'm going to open this up for some. I'm going to go ahead and I just want to share a couple words with folks here about the 508. If there's any folks in here that aren't familiar with the 508 or what that looks like, we certainly provide consulting services for 501c3 faith-based organizations, but what we really try to emphasize and work with folks on to help with is dealing with the 508. Most people are familiar with nonprofits only in terms of a 501c3. There is an entity called the 508. Okay, the 508 is a religious type of nonprofit and deals with churches, integrated auxiliaries, and association of churches. And we work with and teach people, individuals that want to start their own ministry, how to do that, because yes, you as an individual can start a ministry with a 508, and it does not have to be set up as a 501c3, and we teach people how to do that, the advantages of doing that, and how you can make a difference in this world, both with your family, in your community, or if you want to make a difference overseas, give you the structure that you can do that. And there are some significant advantages of the 508 versus the 501c3. And I'm just going to share with you just a few of those right now. The 508 does not have an application to the IRS to be considered. There's no determination letter issued. There's no reporting, meaning it does not have to file a tax return by law. It is a tax-exempt organization, and all donations given to it are tax deductible for the contributors. The section of where law that the 508 comes out of is Title 26, Section 508. And this is actually the law verbatim that you can search for yourself that explains what it is and the provisions that it has. Okay? And also it's listed in many publications. I'm not going to list them all because that would take a long time, but there's a couple big ones, and that is publication 557, which is for exempt organizations, tax-exempt organizations. Talks about how the 508 does not have to fill out Form 1023 to be exempt. That's an application to the IRS. The 508 does not have to do that. And publication 526, which deals with charitable contributions, states that you can deduct your contributions only if you make them to a qualified organization. To become a qualified organization, most does not mean all, most organizations other than churches and governments as described below must apply to the IRS. The 508 is a faith-based organization that does not have to apply for tax-exempt status to the IRS. And even on the actual application to the IRS, it says in very small print in the bottom right-hand corner, which is Form 1023, that this form is not necessary for churches, including temples, mosques, synagogues, integrated auxiliaries of churches, and conventions or association of churches. We teach people how to set up their ministry, okay, that they start and that they control, that can make a difference in people's lives, that has these rights and attributes, and how to remain in compliance with that. And with each 508 filing is included is the Articles of Incorporation, an SS4 from the IRS with the IN for banking purposes only, a certificate of incorporation, a certificate of authorization, or also known as good standing, and a charity's registration letter with registration number from the Secretary of State saying that it is a tax-exempt organization, signed by an official from the Secretary of State. That all comes with the 508 filing. Thank you so much for attending our webinar today. I hope it was helpful to you and will help you in how you do your receipts for your 508 or 501c3. And make sure that those donations are going to meet the muster of any audit given to your donors that give you money. And that's what you want, to remain in compliance. So thank you very much. I enjoyed today. I wish you a great day today. Thanks so much. We'll talk soon again. Bye-bye.